Hi, I'm Gabby Partington and you're watching Pink Diamond, the show where we help you find the diamonds in the rough of the pink sheet and small cap market. The stock on our sites this week is Interlink Electronics, an OTC-listed manufacturing specialist of intelligent sensors which measure changes in force to help create human-machine interfaces. The firm's technology is designed to aid integration with and connection to the much-vaunted Internet of Things. Interlink Electronics is not a new entrant to this space. In fact, it pioneered the development of the force sensing resistor 35 years ago. Since then, the company has evolved into a leading provider of human-machine interface devices, sensors and printed electronics. Though COVID-19 has affected spending on the Internet of Things, research house IDC is forecasting a global spend of $742 billion during 2020 on IoT. Growth in spending is up 8.2% year over year, although that figure is lower than the plus 14.2% figure forecasted in November 2019. Despite COVID's impact, spending on the Internet of Things is expected to expand across almost all industry segments in 2020. Electric vehicle charging, bedside telemetry and remote health monitoring are among the sectors that are likely to see a high rate of spending growth. Smart home spending is expected to grow at more than 14% this year, and spending on modules and sensors is expected to account for 28% of all IoT spending in 2020, according to the IDC research. Based in Southern California, Interlink Electronics has a presence in 3 Asian technology hubs: Singapore, China and Japan. Wall Street professionals clearly think the company is worth keeping an eye on. Trackstar data tells us that the stock was searched for 65 times over the last 30 days by 35 unique users among our institutional user base. Interlink is a minnow in a fast-growing area of new technology with a market cap of just under $12 million. It's valued at 1.3 times its price-to-book ratio and 1.38 times its book value per share. That means that it's not on a demanding multiple, and both the company's return on assets and its return on equity are respectable at 6.93% and 7.39% respectively. The firm recently released its Q2 earnings in mid-August. Revenue in the second quarter of 2020 decreased approximately 15% to $1.7 million from just over $2 million in the same year-ago period, which can be attributed to COVID-19 disruption. The firm's gross margin increased to 58.6% from 52.5% due to revenue mix, as well as efficiencies derived from the relocation of medical manufacturing to China from the United States, an interesting dynamic to observe. Income from operations was $41,000 for the second quarter of 2020, compared with $371,000 in the same period in 2019. After-tax net income was $13,000 or 0 cents per basic and diluted share, compared to after-tax net income of $109,000 or 2 cents in the same year-ago period. Interlink's EBITDA was $95,000 for the quarter, compared to $464,000 in the same period in 2019. On a trailing 12 basis, the EBITDA loss was $27. The company ended the period with $6,097 in cash and cash equivalents. Coupled with no debt, its balance sheet remains robust. From a technical and price performance standpoint, the stock is up 26.32% over the year to date, and over a 2-year view, the share stocks have gained by 198%. The stock has posted a series of new 3-month and year-to-date highs in recent weeks. What's more, the shares got off to a cracking start this week, rallying by plus 18% on Monday to trade at a high of $6.80, and it posted a series of golden crosses on its hourly chart as it did so. Limited volume is always a concern in small cap and OTC trading. However, the last time the stock spiked higher, back in mid-August, when it touched $20, the volume traded picked up too. We will be keeping a close eye on Interlink Electronics. As always, please do your own due diligence before making any investment decisions.